Canadian real estate could be in for a correction or worse. Bank of Montreal. Canada's red-hot housing market hint at cool down as higher rates inflation bite. Canadian real estate is about to experience a full-scale attack, warns Big Six Bank. Real estate company collapses, 500 homes affected, 10 million from investors across Canada missing. Canada housing market showing signs of cooling as more interest rate hikes loom. Non-resident speculation tax. BC introduces cooling off period for home buyers in red-hot housing market. And here's this week's interest rates that have gone up again, where big banks are between 3.7 and 4% now. What do all these media organizations know these days? I don't know. You tell me. But links are in the description. I will be touching on a couple of those things in a bit. And for those of you who don't know, I'm John Flynn from Flynn Real Estate, serving the Hamilton and Niagara housing market and obviously in Southern Ontario. I'm here to give you my professional and honest opinion about the 2022 Canadian housing market and what is happening and maybe what's to come. As always, like, subscribe, and share. Keeps me going to keep creating this content. I like it. I hope you like it too. All right, let's get into this data and see if it's time to sell, as I put in the thumbnail, or if this is just a little market lull and maybe there's some buying opportunities. Let's check it out. Okay, first off, the first graph here, it's median days on market. I just pulled this from our system. Our system, again, it does have a lot of Ontario. It doesn't have Toronto. They're on their own system. And some of the boards are on their own system too. But this shows you the Niagara market, the Hamilton market, and the overall market, as you can see at the top. And that's it. So that's just our group of data sharing, or our data sharing agreement. So you can see the days on market really hasn't changed. A little uptick in Niagara, but overall it's very, very similar for March, for the month of March. Here we have the number of sales. This is just Hamilton and Niagara because all of Ontario, the sales would be way too high and you can't really get a good visual representation of the rest, but it's very similar throughout. We, of course, coming into March, our sales have overall gone up and they'll probably keep going up due to, January and February are usually slower or less inventory, so less sales. Our inventory is increasing, which is natural. If you look at the other years, springtime inventory increases, so does sales. This is where we've seen some changes. So the average percent of last original list price, so what people are getting over or under their actual listed price. Now usually we have been listing low. That's changing. Well, I'll get into that in a minute. But you can see clearly the percentage of sale price to list price is changing. It's going down, but going down from 125% is not really, in my opinion, going down. But it's just looking at the trend. And in all markets, whether it's Ontario, Hamilton, or Niagara, they've all taken a turn down in the March market. Now we look at the average sale price, which to me is probably one of the top statistics I like to look at for gauging the current market. And you see every market, it has started to decline. Hamilton's down 2% in March over February this year. The Niagara's down 1.1%. And overall, in all the data we have in Ontario, in our system, again, this isn't all houses, but in our system with all the sharing agreements, we are down almost 3% for all the data we have. So we can definitely see a trend here. I like to call it, or I guess not just me, but anyone that analyzes these figures or even stocks, these aren't stocks, but you could argue it looked like stocks recently. But this, to me, looks like a reversal, but only time will tell once we get into April if we actually have seen a clear reversal in prices. But it is the spring and prices usually go up, so we shall see. And this is the number one gauge of actually a market, how a market is, the health of a market, and months of supply. So this touches on supply and demand. We went from around half a month supply this year, and now we're up to almost a month, depending on the area you're at. But all areas that I've put on this graph here are 1 month of supply, and it looks like it's going to climb. But again, we'll keep monitoring this for the future months and see what happens. So this graph, of course, I have to pull this from a different part of the system. This is the number of sales, and I just wanted to do a month by month instead of the other line graph. And I want to compare it to this time last year. So you can see our number of sales in January 2022 compared to January 2021 are a little bit lower. Could be an inventory issue. February, same thing. And March, same thing. So our sales are lower. Now let's look at the inventory to see if the inventory was lower significantly. You can see, let's look at the March, since how we're doing a March video. They were just under 2,500 sales in March. And we look at about probably 1,800 sales in, sorry, that was under 2,500 March 2021. And this year's probably around 1,800 in 2022. So when we check out the new listings graph, we were March last year, where it looked like we're about 3,250, 32 to 3,300 new listings in March. And this year we're just under 3,000 new listings. So to me, I'm not gonna, I can figure the math in my head. I'm not gonna give an exact number, but it looks like we've had, compared to new listings, we've had actually more sales last year than we had this year. And lastly, we have just the dollar sales volume in dollar figures. And this was interesting because January 2021 was lower than January 2022, which it makes sense. Prices went up. We should have a higher dollar volume, sales volume. Same with February. Our sales volume this year is a lot higher than last year. But March, our sales volume is down compared to the previous year. So just something to keep in consideration. They are changing. The main indicators are what I watch, and we are, in my opinion, cooling. Now, cooling, you can't say we're not near a crash, we're not near a slow market. We're still, like I tell people, last year and this year it's the same thing. We went from insane to extremely good market for a seller's market. And it's going to take a while for that to reverse, but I truly believe this year we are in a reversal pattern, and we did hit the top of the market in probably January, February, and we're going to start to cool off. And all these factors that have played in with interest rates, and interest rates are what, 4% now at the big banks. The other ones are going to raise it to 4. They're 3.7 to 4, which is a lot higher than it used to be at the beginning of the year. And there's a lot of pressures from the articles or from the headlines I read at the beginning of this video. These are just all, those articles were all within the last week, and there are some positive ones out there, but there was a lot of these kind of headlines making the news. And I've tried to take it from different sources too. Also, I would have to say, from what I've heard, okay, the numbers, you can manipulate numbers or, pull statistics to make it work for your, and I'm not for or against the housing market cooling or not. I believe it needs to cool for affordability, but to me, I'm just working in it and doing my job, and I'll deal with it. But you have to prepare for what's ahead, right? So what have I seen and heard? I've seen and heard a lot recently. Most of the agents I talked to, or I have talked to, and again, I haven't talked to hundreds, I've talked to a handful. They agree, like, it's different. It's definitely changing the market. We used to go with the approach that we would list low and wait a week or so for offers, and we would have multiple offers and people fighting over it. Whereas now, that's certain areas that's gone away. We're just listing it at the price and waiting for an offer anytime. So the strategy's changing back towards a more normal process of receiving offers and whatnot, but we're still at an in-between period. Like, certain houses you might want to do this and certain ones you don't, and depending on the area. So It's not just a free-for-all everywhere where you put it low and you wait for however many offers. So we are seeing sometimes no offers. I've dealt with buyers this week, and there was a house waiting for offers they didn't receive. They said they received some offers, but we didn't get notifications that they received offers. But regardless, they didn't sell the house. So what happens is they put the house up 100,000 back to traditional methods and then negotiate. And again, back to my point earlier, is this just a little lull in the market? Is this an opportunity for buyers to maybe negotiate? And is it a good point in time, or will things continue on this trend of cooling? Time will tell. I think it's going to continue on the cooling trend just because of affordability and interest rates, which anyone that watches my videos know that I think that that's the most important factor in real estate prices these days is interest rates, and they have moved significantly. So I think we're going to continue to see it, but don't take my word for gospel or anything, because I'm just giving my opinion, but it's based on what I see and what I'm seeing on the day-to-day basis. Now, a couple things before I go, I wanted to touch on the governments or certain provincial governments, methods to try to cool the market. And I think one of them is a complete joke, which is the non-resident speculation tax in Ontario. So they just changed it. And again, this is to change it to try to cool the market. This is not because they think it's a good idea for other reasons. This is the number one reason that they wanted to do this. So in Ontario, we have the greater Golden Horseshoe area, which is a Golden Horseshoe around Lake Ontario, Toronto, and all the way up to Niagara. On the other side, it probably goes to Oshawa or something. And they they had a 15% non-resident speculation tax in that area, so that if you're a foreign buyer, you buy the house, you're going to get charged a 15% tax for not living in Ontario or Canada. Now they've expanded that on March 30th to the whole province, and it went to 20%. It was 15%, so you buy a house, you have a 15% premium. Now it's at 20%, and it applies to the whole province. I personally don't see buyers from out of the country buying homes and driving up our prices. I see investors from this country doing it, but I don't see the foreign buyers as an issue. I know in certain areas they are with prices, an issue with prices, I should say. BC, maybe in downtown Toronto with like condos and whatnot, but I just don't see it as an issue. And I think targeting like a small minority of people is not going to cool the housing market. And I think it's just a joke. It's probably just more for optics, so the politicians look like they're doing what they can do, but at the end of the day, it's not going to change anything. And you can read articles, and I think the professionals that study this, the analysts, they think the same thing. Now, BC just introduced a cooling off period for home buyers. That I kind of agree with, because we've gone away from, because of the competition, we've gone away from properly securing your financing, getting a home inspection, or actually, even if you don't want to hire a home inspector, going back in for a second look with yourself or someone that knows more about construction and looking in the attic. We've gone away from that, and there has been some stories of people getting burned on their houses and not knowing what they're getting into. So I truly believe that we should have a cooling off period or a conditional period to do it. So BC's supposedly implementing that cooling off period as law, so you can't buy a house, from what I can read, without going through a 7-day or whatever the time is to finalize financing, do an inspection, whatever you want to do. I think it should overall have a positive effect. Some people will use that as an advantage and take advantage of the situation on that. But at the same time, I think it's needed. But I don't think that is going to cool the housing market. I don't know if that's why. You can read the articles are all linked in the description, and I didn't get into that one too much. I know I've read it. I did a quick read on it, but I don't believe that's going to cool the housing market. It's not going to stop negotiations from happening and people bidding over asking prices, but we'll see. At least they're looking out for the consumers, and that's good. So yeah, that's my snapshot of the market this week. I hope it was informative, and thanks again for watching. Please subscribe, like, share, and we'll get more content out. Until next week, have a good day.